What is an SMSF? Why is SMSF investment getting popular? First, as we spoke, to get control about about your investment decisions. It's also used by people in some cases because they want to buy properties, they want to buy multiple portfolios, so they want to have as many as possible. You have a great capital gains benefit scheme there. You have a fantastic, very, very low taxation in this, and your income is taxed at a lower rate as well. So we'll start. We'll not waste too much of time. We'll start about investment. We'll start how portfolio creation through the SMSF within your SMSF, how it can be a part of your larger portfolio plans, how it can be a part of your wealth building, how it can be a part of you acquiring a larger portfolio and a varied portfolio through different instruments. So SMSF's one tool which is getting a bit popular right now. Agenda. We'll start off with what's about Infinity, what's about Prof Wealth. We'll start out about why is SMSF is getting a bit popular, how does it work, what are the various stuffs which come into it, how does really leverage work with SMSF, despite the fact that there is no equity which you can draw out there. Julius will take us through properties, Prof Wealth Next, how Prof Wealth Next is helping, how Prof Wealth Next can identify great properties for you in SMSF. We'll take some queries and questions at the end. Roughly, we should have the last 10 to 15 minutes for queries, and we should be able to finish our part of the webinar before that. Shared between me and Julius in roughly about half the time each. All right, that's what we are, where we are. We are Julius and Parag on your screen. Myself, Parag Dikshit. Hi, guys.
Myself, Julius Tabre.
And we are here. We're talking about about SMSF and how you can build investment portfolio using SMSFs. A bit about Julius. I don't think so. There are so many people who know Julius, and he's pretty popular in various sites, digitally, online. He's got about 15 years of experience and has been doing data research and digital stuff for quite some time, and he's been popular in property acquisition across Australia and New Zealand, has invested quite a lot in all of these states, and a lot of people reach out to him when they want to understand data analytics about which population, which part of the country we should invest, which suburbs are going great, what kind of analysis do you do, and how do you really find out these gems of locations where you can invest. That's what Julius Tabre brings on the table. Myself, Parag Dikshit, I've been with Infinity Financials, and I've been having great support from people all these years, great clients, great people who become friends for life among them. Have been in the industry for a bit. I'm now lucky to be among the top 10. Most of this because people really like me and have really given me my benefit today, what I'm getting out of the industry. Thank you very much, guys. Okay, why Prof Wealth? Prof Wealth is a buyer's agency which brings across a lot of data analytics, brings across the research which comes through, has completed about 360 deals, much more than that since this last slide was made. We've got a huge amount of purchase value which has been done with the people. More than 36% of equity has been generated by guys. It's a premier buyer agency right now. A lot of people really love it, and we get so many inquiries all the time, every day. We have so many people reaching out, trying to understand what we do, and we'll share a bit of it today, and we share a bit of it across how we work and how we are making a difference in people who are there across the country and who are reaching out. Infinity Financials for you guys. We've been there. We've helped more than 10,000 clients across various years since we've been operating. I've been working there, led by my colleague Mudit, who you will hear next week and the following 2 weeks as well. He'll share his part of the wisdom, and we've been together in the industry, and we've been helping out first-home buyers, SMSF, investments, trust lending, whatever be the complication. We are there to be able to help you out and guide you out on this bit. All right, okay. Here we start about SMSF. A quick poll. If you guys can just answer, it's on your screen. Quick answer. What is the key benefit of SMSFs? Why are we there for property investment through SMSF? Just type 1 if you think you want more control over your future. Type 2 if you think it's a property investment tool. There's no right and wrong. Type 1 if you think you want more control over your future. Type 2 if you think it's just an investment tool. I'll just wait for 10 seconds, guys. Just have to type 1 or 2. A lot of ones coming in. All right, that's nice. A really lot of ones coming in. Okay. That's great. That's great. Type in, guys. We just wait for 5 more seconds. All right. Most of people have just said ones, and that's correct. SMSFs really offer what we want to have. That's about a control over your super. We'll talk about it more. It helps you control about what you want to do and what you want to achieve and how you want to achieve your wealth plans. But it also gives you control more than the industry supers where you don't have a control. If you want tomorrow, you want tomorrow to go to, let's say you have Australian super and you want to go and tell them, oh, I don't want you to invest in fossil fuel stocks. I'm ethical. I don't want investments there. I want you to go and invest into more ethical stocks, invest into more greenhouses, invest into more green products. But no, you can't, because they have their own guy who has their own investment strategy, and that's what they will believe in, and that's what they will follow. You can only choose various options. I want a balanced one, I want aggressive ones, and all that. But what an SMSF normally brings on the table, why people are trying to form an SMSF, is to take control over that and decide how do they want their retirement funds, their super funds to grow, what strategy they would want to involve there. This is a much longer, much deeper discussion, not this forum and not by me, but that's a strategy which you sit down with your financial planner and decide and make about your super. And that's how the SMSFs start helping you out. And that's how the SMSFs will give you what you want to achieve. But that's what the key benefit of an SMSF is: more control about your future. All right. What is an SMSF? If you want to understand, just as a basic on your screen, today, when you're earning your income, whatever is your salary, let's say you earn 10,000 in a month, at 11%, you'll have 1,100 going into your industry super. So what you really do is move out of your industry super, and instead of that, you move your income by contributing your super into a self-managed super fund. Self-managed is self-explanatory, and super fund is a super fund. So you become, maybe in layman's language, something similar like what in our example Australian super does to you. But you set up your, not as big, not as complicated, not as thing, but something like that, just to understand. And you will set up an SMSF. In that SMSF, all your super contributions go into that, which basically is a bank account, which you can see. And that bank account is how your super is related to and how you contribute to that. And you really see that bank account, but it's heavily regulated. So please don't try and mess with that bank account. Anyways, you can set up an SMSF in two ways. You can have an individuals, which basically means you, and if your partner is also a part of it, or if you have other members in the SMSF, you can have them as individual as trustees, or you can have a corporate trustee. Mostly, in fact, barring one or every other lender will want you to have a corporate trustee if you want to take a loan, but we'll talk about it in the coming slides. What is an SMSF? Just to explain to you, it's a private super fund. Maximum 6 people can be in the fund. You will have all the members as trustees or director of the trustees. You will also get a lot of flexibility and control through the SMSF setup, which brings across to you what the benefit we spoke about earlier. SMSF, once you set this up, gets you more flexibility, gets you more control, allows you to do what you want to do. But please also understand there are high penalties if you mess up your SMSF. There are a lot of rules and regulations, and it's better that we get proper advice. We always are in touch with your accountant. If you're trying to do a transaction and what transactions you do, it also involves fees and charges, and it also brings across to you responsibilities and compliance, which you should be following up on. All right, another quick poll. Why is SMSF property investment getting popular? There are 4 options on your screen. You can type in any of them. Why is SMSF investment getting popular? 1, to get a property. 2, I'm just buying because my friend bought one. I really don't know. Or the last one, I understand what SMSF property investment is all about, and hence I'm getting into it. 1, 2, 3, or 4. Choose any of the options. 1, 3, 4, 4. Lots of threes. Lots of threes. All right, lots of threes, and we'll bring across to you why is it getting popular. It's good. It's good, and it's very it's something which a lot of people don't really know about, and we'll talk about it in brief as much as we can, trying to keep the time limitations. But if you want to know more, I'm always available. I'll give you my coordinates at the end. Anyways, you can find me online as well, and with Julius as well. Okay, mostly people don't really know what SMSF property investment is all about, and they're trying to do that. Why is it getting popular? First, as we spoke, to get control about your super, about your investment decisions. As I said, if you want tomorrow tell Australian Super, please invest in property in X place, they won't, they go by their own investment decisions. Second, you want to buy a property, you don't have borrowing capacity, or you don't have enough funds outside, and you really want to get into investment, that's another investment tool which is coming across, where you can invest into super. Third, very important one, very critical one, which a lot of people try and find out and use for that, is taxation benefits. You have a great capital gains benefit scheme there. You have a fantastic, very, very low taxation out there in this. Plus, you can make voluntary contributions, which can help you save tax outside of super and also help you save tax inside, and your income is taxed at a lower rate as well. Fourth and the last one are long-term investment objectives, which means that if you're able to find a great capital gain property, which you think has potential to grow over say next 10 years, 15 years, 20 years, it can really double, triple, or whatever. If it can really do good, very good, and you want to invest, and you also want to take an advantage of capital gains, you can invest through your super. A lot of people invest into commercial property through super, and there are different rules around that. And basically, it fits your investment objectives. Basically, it allows you flexibility, and a lot of times about tax benefits which you get out of your SMSF. There are rules which govern the taxation stuff there, and it's important that we follow that, and that's what benefits us in the super, and that's why it is getting popular. All of these combinations for everyone, it may be something else, but most of the people who I talk to, who come across to us to set up an SMSF and get a property in there, are trying to get either of these four as benefits. How is an SMSF property different? How does it really differ? Now, just follow this and I'll briefly explain to you how is it different to buy an SMSF property. Follow my laser. This is your employer, this is where you are, and you're making contributions now. Now you moved out of your industry super and you created your own SMSF. So all your contributions go inside your SMSF. What you have to do now is you buy a property. To buy a property, you will have to set up another bare trust, because of the way the rules are, you cannot own a property which has a loan under the SMSF. You will have to buy it under a bare trust. This bare trust is created, holds the property, the lease, which the bare trust will give it to a tenant, and the tenant pays the rent into your SMSF again. So what comes in is your contribution and your rent into the SMSF. The lender, where you take the loan, they will have the security over the bare trust, but the loan repayments will go from your SMSF bank account. So your SMSF bank account is the fulcrum of what happens in terms of the amount of income coming in, the liabilities being paid, but the property is held by the bare trust. And it becomes a bit of a different structure, and it's a bit of an involved structure which requires a lot of work which has to be done by our accountant. Sometimes it can take 2, 3, 4, and maybe more weeks to set up an SMSF, and then you buy the property. In bare trust, mostly created on the same day on which you buy the property or sign the contract, and that's primarily being created to own the property and do nothing else. It just sits there owning the property till your loan finishes. Afterwards, it can move back into your SMSF. Loan process, okay, quickly, everyone, type in 1, 2, or 3. Do you think it's the same normal loan process, or is it different? Type 1, if you think it's the same normal loan process like we get an investment or an owner-occupied property. Type 2, no, it's different. It's different from that. Type 3, I don't know. It's okay to not know. That's what we are here for. But yeah, a lot of people don't really know how does an SMSF loan work, and it's pretty fine. That's the way it is because it's getting popular now. It's not common. We all would really know how investment property is purchased, but not really common to buy an SMSF and not property, and not really common for everyone to really understand how the loan process works. Very simple yet complicated. And when we get into the loan process, to understand how the loan process works, we need to really understand how an SMSF setup works. Like I spoke in the previous slide, there are a few entities, few moving pieces in the SMSF setup, and that setup has to be done by the accountant along with your mortgage broker. Mortgage broker will always tell you at what point of time you have to do what, but most of the setup of the SMSF structure is done by the accountant. When you go for the loan, then you talk to your mortgage broker, and the broker should really know well about how these things work. Otherwise, you can get entangled into a kind of a mess, and it becomes a bit troublesome. Anyways, on your screen again, it's very simple. The SMSF loan process is document heavy, much more than what you provide at the time of buying an investment property in a normal sense. You will have to provide documents which are your SMSF trust documents, your bare trust documents. You have to provide your IDs and incomes and super contributions and all that stuff. If you already have a super, then you're getting into tax returns and these advice and the audited advice, auditor audits and on the SMSF. You have to provide the auditor reports, you provide all that. The mortgage broker should be able to screen through and should be able to find out what he needs to present to the bank and how to calculate the income, and that's where it goes. Incomes are only two in an SMSF, just two, and it's your super contribution and your rent. And that's what becomes more critical, because the contribution of rent towards the income in case of an SMSF loan is much higher than the contribution of rent in a normal investment purchase, where your incomes become a large part and the rental income is a smaller part. Here, rental income is much higher. Sometimes for high yield properties, it can become as high as 50% of the purchase of the total income contributions, because the super contributions are limited to what you can, or the maximum cap, which is about 30 grand. Then obviously you have your legals and the accountants and solicitors coming in between. Again, document heavy. You need to have legal advice. You need to really speak to a solicitor. You will really need to see the accountant. Some lenders will also want a financial advice, and you also have to get all of that bit here. What can an SMSF buy? Very critical to know. Very important to know. It can buy you a resi or a commercial property. It can help you buy shares. It can help you buy units in a trust. It can help you get some cash. You can deposit cash, manage funds, which is, or you can buy cryptos, and you can buy metals, which is like gold or silver, and keep that. Some people buy art in this. All of these are pretty regulated and have different ways of getting regulated. But we'll stick to just talking about property today, which is residential or commercial. What kind of properties you can buy? Again, important. You can buy a resi, you can buy a commercial property, you can buy land only, and you can buy properties which say you want to rent off to an Airbnb or bookings.com or something of that sort. But land, please remember, you will not get a loan from any lenders. You will have to buy cash only. Other ones you can buy either through cash or through this. Restrictions exist around how an SMSF properties can work, that if you're wanting to do construction or some kind of a development, you won't be able to get a loan there. It mostly has to be cash only. You can't rent out to unrelated parties. You can do to unrelated related parties. I'm sorry, if you can do to related parties, but only in case of commercial loans, not in case of this. And when you can occupy your premises. If you buy under SMSF, you can never live in it. You can never have your family or members or people not at arm's length distance living in it. You cannot use it to take out cash or equity or take out cash to buy another property. All that is not possible in SMSF. What can you do as a construction work? Very simple. You can do a normal repairs. Again, speak to an accountant before doing all this. You can do a maintenance there. At some lenders, you can even take a bit of a loan to do some maintenance, but very, very strict conditions. Upgrade, no. Knockdown, rebuild, no. You can't do all that stuff into SMSF. You have to take accountant advice to do all of these things. Very critical. It's a highly regulated product. We can't mess up with it. We can get huge fines if we mess up. Again, how does it benefit you as an SMSF? You get rental income through which you do your loan repayments. You will have employee super contributions going there. More importantly, you get benefits like capital gains tax. When you retire, if you sell a property, zero capital gains, like your owner-occupied property. Even if you sell earlier, then the tax rate is much lower. It can be 15% or lower. There are regulations around that as well. Again, you have a negative gearing benefit within the SMSF environment, and you can take capital gains. You can do all that stuff. You can have salary sacrifice. You can contribute. You can pay off your loan faster. You can have your super rising faster, so that when you retire at that point of time, if you were to normally contribute these through the capital gains and all the other benefits, you will have much more amount coming in. So on an overall benefit, the taxation provides the biggest benefit why people are really moving towards owning a property under super, followed by also treating it as an investment vehicle through which they can buy properties which they think that can give them a much better benefit, which they think that can give them a much better yield and can give them a longer term return, and also for their retirement, to be able to plan out their retirement, to be able to plan out how they want to do their wealth building in the future. So all these put together bring across an SMSF benefit. Going forward, SMSF benefits also have side benefits, secondary benefits like asset protection, and helps you secure the SMSF in case of defaults or in case of bankruptcy. It does all that stuff. It reduces overall risk in your portfolio, but that's a longer discussion. Okay, now how is it not beneficial to you? It's not beneficial if your super contributions are not above a particular amount. It's not a legal stuff, but it's more that if you have, say, roughly about 150, 160, 180K in your super, it still is beneficial to take the costs of setting up an SMSF. Otherwise, if your balances are small, then the cost of setting up an SMSF, cost of maintaining an SMSF, which is about roughly what I know, about 2 odd grand, 3 odd grand, which you will spend of maintaining an SMSF in an annual basis, then setting up is a cost. So if you have low balances, not really beneficial for you. So you should have decent amount of balances. There are fees and charges out there. There are restrictions around the kind of properties which you can buy under an SMSF. It's not beneficial for you if you are lacking in any of these. If you're looking to occupy your property, or if you're looking to use it for family, not for you. As I said, there are restrictions around what you can use the properties for. Till you are able to adhere to those restrictions, it's okay. But these are some of the reasons why you should not really get into the SMSF investment, and that's not beneficial if you're looking at any of these. Okay, so then what kind of properties can I really look at? If these are the restrictions, what do I really look at? What can really benefit me? Quick poll again on your screen. Can you type 1 if you think you can get high capital gain property that's more beneficial, or a high cash flow property that will benefit more, or a highly negatively geared property that may benefit me more? I should look at that. Or I don't know, I just want to invest. You please tell me, I'll go for that. All right. 2s, lot of 2s, 3s, lot of 4s, okay? I love that. There are a couple of ones, all right, that's nice. All right, so as we discussed in just the previous slides, the biggest benefit comes to you because you are having taxation benefits, which are capital gain benefits. You are having a lower tax rate. You are having a great capital gains benefit in your SMSF. So when you exit out of your SMSF, you're basically trying to leverage out of the capital gains to unnaturally grow your super, which means give you a much better growth than what it could normally have got in through your industry super. That is what really drives the people to invest. So it's a combination of all of these, but the most important ones why people really discuss and we want to come and want to invest into super is because they want to enjoy the high capital gain benefit which a super product provides, and a high capital gain benefit plus a high cash flow benefit, even if it becomes positively geared because of a lower tax rate, because of what you are enjoying as a capital gains, you would love to invest and diversify into an SMSF lending. It's also used by people in some cases because they want to buy properties, they want to buy multiple portfolios, so they want to have as many as possible. But eventual benefit of an SMSF is when you enjoy the taxation benefits which come along with the way a super and SMSF lending brings across to you, and that's what makes it the most popular and the best benefit which people will want to enjoy out of. No right and wrong answers, but mostly favored by people who would want to have a high capital gain and then enjoy that benefit which super SMSF has to offer. Quickly, I'll just touch upon this before I hand it over to Julius. Power of leverage, we understand. We've always discussed this in all our previous discussions about how a power of leverage is used to buy investments and how does it fit. We've always spoken about how you can have financial leverage and how you can have personal leverage and how you can have an impact on yourself, on your connections, and how you can have the wealth building impact through financial leverage and personal leverage. And that's important. What happens in an SMSF, typically what you're looking in your financial leverage bit is to have a goal where your asset gets you more return than what you're borrowing in terms of borrowing costs, and also you are able to invest without using personal funds. That's the typical goal which you want to do in a financial leverage. And these benefits come with an SMSF because you're using your super contributions, and that's how it fills your goal number 2. And obviously the return on investment being higher because of the tax benefits which you get along with the capital growth in that benefit is what brings across to you. You may be negatively geared in this because your rate of interest are high, or maybe till today they were high. They're going to go down a bit after today, after the effect of the RBI rate cuts, but still higher. But these financial leverage brings across to you. In terms of how you work in an SMSF, only way you can work out is 2 ways. You can either sell the property and get the cash and invest again, or you can pay down the whole thing, just sit on the property, let the income come in and pay tax and go into it. What you can do, leverage your money faster. You can buy multiple properties in your SMSFs. For each property, you need to set up a bare trust. But what happens in this case of a leverage in SMSF is that you will have, if you have an X amount of funds, if you have, say, about 150 grand, then you can buy a couple of properties. That's what people do, try and buy multiple ones, or some people will just buy a big one and just sit on that. So if you've got the money into your super fund, into your SMSF, you can really utilize it to get into properties which can get you the maximum benefit. Maximum benefit sometimes can be because you are growing at a much faster rate. The equity, you may not use it to buy another property. You may not withdraw it. You can't refinance and use it, but that equity still sits there. And whenever you sell your property, at that point of time, you realize that benefit, and that whole cash sits in there at either a lower tax rate, or it can sit there with a capital gains benefit, which allows you to be able to multiply your super and enjoy the benefit at retirement. Key pillars, like we've always discussed, and we are discussing property and capital gains and the cash flow, positive cash flow, and we are discussing how a property should really do good. Again, touching back, key pillars to property investment, very key 4 pillars to investment, which is, first of them is obviously the property in itself, how good that property is, and that's the biggest pillar. That's, I think, the biggest bit which you need to really take care of. It also is important to have your loan structuring in place. It also is important to have your purchase structuring in place. Under an SMSF, you're limited by the way your structure. You have to buy the way you have to buy. You have to have your bare trust, and you have to have all that bit if you're taking a loan. So that's how that structuring is a bit limited here. But then the most important bit hence becomes the property, or how and do you identify a property? What kind of a property do you get into? As we spoke about high capital gains or high cash flow property, and the overall strategy. How an SMSF sits in the overall strategy, that becomes the most critical bit. And at that point of time, when we wanting to talk about properties, I think there is no better person than Julius today in the market who can explain to us how a great property can really be found out and how we can really get into a better situation, into a better scenario, and get a best property which can suit the SMSF, suit your circumstances, suit your wealth building and investment plans and objectives. And I hand it back over to Julius now.
Thank you, Parag, for the insightful sessions on the SMSF. As Parag said, SMSF is literally a complicated subject where not all the strategies within the property investment work on the SMSF. Also, the type of properties which we buy in SMSF are highly into sort of the suburb, where not all the suburbs are qualified for the SMSF as well, because in SMSF is poised for the long-term growth. We only buy the properties in SMSF where the suburbs are pretty good in a long-term growth. The tenant quality is better. There's enough affordability within the local population where a long-term growth will be persistent. And then type of property we buy in SMSF, highly due diligent, plus we can't go to the very old property also. So these are a few things to be noted. Let's start with the prop wealth next. So for every investor, there are a few questions in the mind when you start your investment journey. Where to invest? How to invest? How do I find my suburb? Because there is so much of data available in the market. Also, there is so much of free knowledge available in the market. There's a lot of media hype, a lot of Facebook posts. There's like a lot of data points to follow. A lot of people are confused about the data point and there's no outcome. So what I mean to say is, which kind of data point to follow, which will give you a correct analysis to understand which markets will go up. Because in market also, like from last 3 to 4 years, market was so bullish. So there had enough growth happened. Where should I invest now? From last 3 years, market have been risen by around 30, 40, 50, 60% also. So what would be my next $1 million suburb? Whether the suburb where I'm going to invest now, would it give me a short-term growth as well as a long-term growth, or it's only for the long-term growth? There are more than 15,000 suburbs across Australia. How do I select mine? Which will be in top 50 or top 100? There are a lot more than 40 data points. Which data points we should select? Which is the next $1 million suburb? When I say next $1 million suburb, means it's in the long-term basis. So every property has two types of growth cycles. The number one is the short-term, where you get around 15, 20, 30% growth in next 1 to 2 years in the short-term basis, which we withdraw as equity to get your next property. That's a deposit. And then why that suburb will grow on a long-term basis? What are the fundamentals over there? What kind of population is living there? How much they are earning? Whether there are enough income rises happening into the suburb? How is the socioeconomy of that suburb? Whether the socioeconomy is changing? What kind of inventory is available? What are the future inventory in that suburb? What kind of infrastructure projects are available in which will create jobs in short-term and long-term basis? That all the things are matters when we look for the long-term growth. So, and then the another question is why go to that suburb? So to answer all these questions, we made a great product called Propel Next. It's a combination of multiple data points comes together, where we fetch the data from a lot of sources. That's the raw data. We put it in our system, scrub the data, and we have an algorithm where we tweak it according to the market conditions. So from last 3 to 4 years, the market was so bullish. There are a lot of suburbs which grew more than we have anticipated. So whether they are into the correct path, whether the trajectory is correct, whether they can hold the long-term basis. So we have collated all the data, analyzed the data, and then we have introduced few new metrics called gap analysis in the system to understand which will be the next hotspot. So in Propel Next, we have a capability to monitor current scenario of the market, as well as current scenario of the market, as well as how is the current demand and supply metric look like. Because whenever there is a very high demand on the properties and supply is lower, then property tends to go up. but whether that is sustainable growth or not, that's not only depend on the demand and supply, because demand and supply could be a short-term growth kind of indicator. So to get the long-term growth, we look for macroeconomic indicators like the population is one of them. But when we look at the population growth, whether that population is what's the age guide, whether the population is above state average or is it a declining population. If the population is not rising correctly, then that will be a red flag for us. So then how much they are earning, what are the income, what kind of future projects are coming there. Sometimes there are a lot of government announcement from the about the projects, but whether those projects are actually in implementation or under the approval stages, because there are several stages of the project. So we monitor the projects which are into the implementation or which are approved already, and what is the impact. Sometimes the projects are like little short term, or these projects are to just serve the current infrastructure. We tend to look for the projects which creates more job, and then that will incur more population to come into that particular council, which creates a more demand towards the property. So we have included that metric into the Propel Next system. Yeah, so in Propel Next, so this is a little glimpse of our product. So to start with, this is little backend about our product. So this is called, if you look at the screen, then entire Australia is divided into the statistical area called statistical area 4. That is the broader boundary. Statistical area 3 means the council. So when we do the research is happening on the councils because they are the bigger boundaries, and then only suburb can't perform by itself unless the entire region is performing. So most of the research is happening on the council. So in that council, we look for the current demand and supply indicator, as well as we look for past growth also, because the future growth is dependent on what is the current demand and supply indicator, plus the historical growth, which shows, okay, this area was growing from long time. That means it's very consistent in its performance. So that is important metric. So if you look at the screen, the first few fields are for the short-term growth, for the past performance, as well as we track how much is the current inventory, what are the inventory trend. There will be possibility that the current inventory is pretty good, but the inventory count is increasing. That is not the good indicator, because its impact on in short-term basis on the demand and supply indicator, and which will restrict the growth. Then we look at the then we are tracking the days on market, which will show, okay, how many days it will take to property to sell. If it is very low, then the market is red hot, but we are focusing on, okay, whether the demand and supply indicators are changing. So these are all the demand and supply related indicator. Yeah. Then if you look at the screen, so we are looking at basically affordability sections. So affordability is very important factor, because in a case if suppose demand and supply is not changing, or it's good. If there is a lot of gap between demand and supply, but if there is no affordability to buy, then there won't be a further movement into the price growth. Or sometimes the affordability is much better, but demand and supply is not matching. That means you have a lot of supply, still the price growth will not happen. So we have to marry both the indicators, which is affordability as well as demand and supply, to understand, okay, yes, in long-term basis, there will be enough affordability that people can afford it, and then there will be price growth, as well as there should not be a lot of supply also. Yeah, then we track the population, because we have to check the impact of the population. So we check the latest census data as well as the past census data, and we analyze what was the population growth. Is it above the state average into the particular council? What's the age group? To understand, okay, if yes, that council is growing with the population with the right age, because if they are the young families moving into the particular location, then yes, there are a lot of infrastructure growth happening, as well as and if there is no supply, with a lot of young families are moving, so there will be enough price growth. Yeah. Also, we are tracking the socioeconomy of the particular area, because gentrification is the biggest factor for the long-term growth. So when we say a socioeconomic index, that means we have a scale of 1 to 10. 1 means it's a lower socioeconomic area. 10 means it's a high socioeconomic area. We tend to find the properties are in between the mid to high low socioeconomic area. This indicator even indicates us, okay, how is that area is performing in long-term basis. So we track the trend as well. We look at the socioeconomic indicators where the scale is at 3 and it is changing rapidly from 3 to 4, 4 to 5. That means the good income earners are moving into that area because socioeconomy is changing. Since there is a lot of affordability because it was a low socioeconomic area, so there is a lot of affordability and the prices are cheaper. But since there are a lot of people who are with the good incomes are moving into that area, that will give another boost to the property prices. Also, we check the job diversification as well because that is very important. So we have categorized the job into multiple segments, and wherever the major job categorization risk is more than 20%, which will impact on all the sub job categories, then we skip that area. So in our system, we put the job categorization risk as well. So we select all the data with the fundamentals, demand and supply indicator, and then we come to the conclusion, okay, yes, that's a council where we need to focus. According to that, then we look at the suburbs, which are the best suburbs to focus on, and then we start looking for the properties in that area. Okay, so when we look at the Propel Next, it is with us from last more than a year. So from last 6 months ago, we were actively using the Propel Next fundamentals, and then we found few areas like we were started investing into the regional NSW when a lot of people are trying to buy properties into the regional Queensland where the affordability is not great. Most of the areas are failed in our gap analysis. Renter proportion is too high in regional Queensland. There are a lot of mining dependencies. Job concentration risk is very poor. So that's the outcome which we got it from the Propel Next. And now if you compare the past performance 6 months ago till now, when we were buying, the vendor discountings were around 78%. Now the prices is competitive. The vendor discounting at around 1 to 1.5%. And what we can see is the property which we bought for around 350 to 360, the latest valuation in 6 months down the line are coming at around mid 400s. So basically that's the power of the data when you use the data in the right manner. So what are the next hotspots which we need to focus on? So according to the state, when we look at the South Australia, yes, we all know that Adelaide was growing from last 3 to 4 years, but it's still strong. There are few council within the entire Adelaide's are good, but currently we are focusing on the Treaty Gully Council because of the multiple infrastructure projects, as well as there is a great affordability within the localites. Demand to supply ratio is pretty good. Long-term affordability is better. And then according to that, the Propel score is around 3.8 to 4 out of 5. The next council is in the Western Australia, which is city of Bunbury, down south, around 100 to 150 kilometers in between from the Perth CBD. They have got good lithium factories. They've got a good ring road, massive infrastructure projects happening, good affordability within the localites. The Propel score is around 4.2 out of 5. In Queensland, we are looking at the inner Brisbane. There is much to happening because of the Olympics, as well as there are a lot of price improvements and the growth opportunities in the Olympic present. So Propel score is around 4.1 out of 5. In NSW, we are focusing on the Shoalhaven. Score is around 3.6 to 3.7 out of 5. In NSW Victoria, we are looking at Albury and Wodonga. So big hospital is coming, which will employ around 1100 people. Big train network. When we look at the train system between upgradation train system between the New South Wales and the Victoria, that's a major hub. Currently, prices are going through a massive improvement. So Propel score is 4.5 out of 5. Okay, so I would like to hand over here from Parag.
Thank you, Julius. Thank you so much. It's always amazing to learn from you, amazing to understand how you look at data. Really amazing to understand you and your team of analysts. And we've got a couple of actuaries who are in the analyst panel as well. And they are the way they bring out data, the way they kind of bring light to what we are seeing, the way they can show numbers and they can show trend line and they can explain to us on what's going to happen and how the future looks like and how the new properties and the new areas can really come up and give us some kind of a benefit which is better than the market, how we should be able to perceive the future growth. That's important, and that's the window of opportunity to all of us. Some of the points which I would love to mention, that we already know the interest rate cycle is already on the path down. Today's been the first one, and I think it's brought cheers to everybody. It's given us an indication that things are now much brighter on the horizon, unless obviously there are some things which we don't know, and that's something which is out of our control, but looks pretty interesting. It's very good. It's very strong about how it's going to happen. There are a lot of areas which are seeing that we are going to be read in terms of prices. A lot of interest which are latent among people. Just talk to any mortgage broker, your mortgage broker, or talk to us. We can tell you how our phones are buzzing now with people who want to take pre-approvals, people who want to understand their borrowing capacity, people who want to really get into more lending, people who want to understand where do they sit, owner occupiers, first home buyers, investors, all of them. And that's where the window of opportunity knocks on everybody's door, because of what we can see. It's a very interesting 2025 which is going to come in front of us, and I'm pretty sure all of us would love to have an opportunity to get a piece of it, to get ahead of us, and to get our wealth objectives done, our wealth, our circumstances become even better than what they are, our goals which we want to meet. And that's where the window of opportunity lies in the year, which is 2025, which looks to be extremely positive, which sees a lot of movement, which will show us how we are all able to grow and able to grow our portfolio up. So what we as a team bring on the table, both PropWealth and Infinity Financials, we are there together. We are able to help you out, help you make a plan, help you make a strategy, help you make a analysis of what you stand at present, help you understand where you can grow, what your borrowings can be, what can be a statistics, what can be a strategy around stuff, how you can really build your wealth, how you can really go forward and make a plan which is implementable, where you can have a 1 year or a 2 year vision and an horizon of doing things. And that's what we bring on the table. That's what we bring together to you. You've got an ongoing support which comes across to you because of this. And all of this comes to you because we are together and we are offering to you a whole rounded strategy and an advice about how things are going to work. And this is exactly why, as I was saying at the start, we've been lucky. We've worked hard, and we've really got the results. We have got fantastic client voices which you can hear about us. We have great words which people speak about us. That's because of the way they've appreciated what we've provided to them. They've appreciated how we've been able to bring benefits to them. They've appreciated how we've been able to make a small difference to their life. And there is no better sense of achievement when somebody comes to us and says, thank you very much for what you've helped us create, and thank you very much for help us getting into our first house. Thank you very much for helping me create what my goals were. I really didn't know, and you've been able to at least guide me and tell me how I can look at things. Sometimes people just come and go back and say, okay, I've never thought of these things. I never thought of how these will work and how we can get into a better situation, but it throws some light, and that's what we are there for, to be able to give what benefit to you guys. Benefit has come across in a number of ways. We've got great buyer agents in the industry, and we've got fantastic mortgage brokers in the industry, but we've got our bit, which is because of which we are able to advise people to get a higher growth than what an average person or from any other business people have got. I would love to keep on talking, but I think we would be talking about questions which come across to us. Please feel free to type in all your questions, all your queries. We would love to take all of them. We've got about 10 minutes, as we spoke at the start. I think we are on time, but we will be taking more questions, as many as we can. We will. I'm pretty sure we will try and keep the time, but doesn't look like. And that's what we started at the start, to be able to keep time. But unfortunately, we are going a bit further than where we are. But here it is. We'll start with the questions. Please type in as many as you want. We'll try to take every one of them. But the first questions which are there, which property is better in SMSF, positively geared or negatively geared? Okay. As I was talking in between, and it's a question which requires more discussion, but broadly, We're looking at negative gearing when you are wanting to save tax and the tax benefits which come along with negative gearing. In super, the tax rate is not high. So you're not sitting at a 50% tax rate or a 40% tax rate or all of this. I don't want to get into an accountant's boundaries, but broadly, the tax benefit comes with capital gains. The tax benefit comes with lower tax rates, which are already there in your SMSF. So when it's already a lower tax rate, a negative gearing does not really take you too far. The more positively geared you are, the more chances of a property having capital gains. It looks better in that scenario. Having said that, you may still have a negatively geared property if you feel that there will be a great capital gain scenario. So you're going into it for the long term. And SMSF investment is actually a long-term basis. So you can still opt for either of them. We need to really discuss out maybe the properties, maybe your investment goals, and how you would want to look at it. And happy to have a chat on this as much as you can, and to try and understand your particular circumstances and give you an advice on that. How much money is needed in super to buy a property? You can buy a property from, say, you can get properties at around 300,000 as well in regional areas. You can get some slightly lower prices as well, and you can buy up till as much as you can. But what happens in an SMSF is, as we said, the objective should be very clear. First is very, very roughly, and this is what when I talk to accountants, they tell us, unless and until you have less than 130, 140, 150 in your super, you really are not getting a benefit out of the tax of the expenses which are there, because it's an expensive proposition to have an SMSF. So your property, if you're having about 150K, roughly you should be able to buy a property of $450,000, $500,000 in your SMSF, subject to your borrowing capacity. But any lower, you may not really have a benefit in terms of costing. Having said that, if you have lower ones, and if you really find something which is very interesting, which is going to give you a long-term benefit, and you believe in it, and your buyer agent believes in it, and your mortgage broker believes in it, your accountant believes in it, there is no lower amount or a higher amount for doing that. Okay, sorry. How is your value proposition different from other BAs? Maybe I'll give it to Julius to answer this.
Yeah, so it depends on how other buyers is operating, but in our case, basically, we do a full analysis with the multiple sources to understand how market is going to be performed in next 6 to 8 months. Also, particularly when it comes to the SMSF, we just don't go and buy any property which is available in the market. So in SMSF, we have a certain strategies. Similarly, where the population growth is pretty high, and then the areas are poised to go for the growth for the next around 10 to 15 years. Also, the tenant quality is better, and then and in long-term basis, you'll have a good performance of the property. We only select this property. Also, we don't go to the properties which are we don't go to the super regional into the SMSF. We don't go to the properties which are pretty old, 50 years old with the bigger land, because you can't apply the subdivision strategy. You can't put the granny flats in that. So we look for the properties which are decently made, less than 10 to 15 years old, where the long-term growth is very good. That's it.
All right. No, sure. What's your fees? Okay.
So we charge $12,000 plus GST. Out of that, first $1,100 is payable when you are signing the contract. The rest of the amount is payable when the property contracts become unconditional. We do find the properties which will grow in a long-term capital value. We do full due diligence of the property. We work with the mortgage broker to get the loan approval. We arrange the building and place inspection. We work with you till the rental management. We keep track of your portfolio, and when your property is equity ready, not in the SMSF, but for the normal investments, then we initiate an email communication to expand your portfolio. So basically, we work on the strategy.
Okay. I think a follow-up question to what we were speaking. Where can one buy a property less than $300,000? All right, Julius. Can we get one?
That's a tricky question, but at this stage, we don't buy in SMSF anything at 300x because few properties available in super regional, but they don't match our strategy and the research. So the absolute answer is no at this stage.
Yeah, so maybe in the not in an SMSF, but in a normal case, you may find that it suits your circumstances, but that's not what we are talking right now. You can still find properties which are less than 300,000, as Julius says, in super regional areas or in smaller areas, much smaller, but they should really fit with the SMSF strategy. You should be able to convince yourself, you should be able to talk to your accountant, you should be able to talk to your mortgage broker, and you should be convinced that it's going to really get you a benefit. It's just not getting a property in the SMSF, which is important. It has to be fitting into your strategy bit, and that's why it's important that the property, it's not about the value, it's about the value proposition or your objectives and your goals, and it should match with that objectives and goals. And then the prices are there. 300,000, a lot of regional areas where you can get a property. Fit super or not, that's a different discussion. Okay, do Big Four give loans for SMSF? And what kind of interest rates exist? All right, a few years ago, we had the banks barred from giving loans to SMSFs. So you will not find any bank which is available in that space. You will find only non-bank lenders which are remaining in that space. Non-bank lenders are, so no, Big Four, no, they are not there at all. The non-bank lenders, some of them are really big ones like Granite and AFGs and then First Mac and Resimac and Pepper, and a lot of the big guys are there which are non-banks but are operating in this space, and you can take benefit from any of these. Interest rates typically about at an 80% loan level, you will have most of the lenders at around 7.5% today. It will decrease or change hopefully after this RBI rate announcement, but yeah, that's where you're sitting at about 7.5%. Depends on various lenders. Some will have fees, some will have other structures, some will have cost structures, discharge fees, and all that stuff. When you sit with a mortgage broker, they will be able to explain to you, or you can call us and we can explain to you how it works and what kind of fee structures are there. We've got another question. Is 100K in super enough? Though I've answered this question at the start, as I'm just saying, it's super, it's just not about whether you have the deposit and you're able to buy. It's just not about just having a deposit. It's also about, it's more about strategy. It's more about a plan. It's more about being able to implement that plan. Roughly with 100K money in your super, the max you will be able to buy would be less than about $400,000, much lesser than $400,000. And we just spoke right now. It may be in super regional area. Will it fit into your SMSF goals? We really have to see. Sometimes people may buy something like this if it's a smaller commercial and they will think that that commercial can really fit their own business objectives. Then maybe you can look at it. Those kind of things means, for example, you say that I have a shop in a particular area and I'm going to operate it for my own goods. I can buy a property like that because it's for me, and a commercial one I can use for myself. A smaller property can work for you if you're having enough income which goes in there. But if not, then it doesn't maybe really fit the objective. Most important, the strategy should be right about SMSF. It's always very critical. It's always very important. But in SMSF, it really has to be even more important about the strategy, about the plan, about what you want to achieve out of the investment through the SMSF. Sorry guys, we're reaching at 8 o'clock. I'll just take a couple of more questions, and I'm sorry. We don't want to really go beyond time, but a couple of questions I still take. And if you guys have something pressing and you want to move, obviously you're free to go. But I would love to answer as many as you can. Please ask us as any questions which you have, and then we'll be happy to take. But we'll take just 2 more questions, and then maybe we'll call it a day. Thank you so much for listening for us. But the next one is, how do you do inspections and negotiations and due diligence?
Yeah, so inspections are done, depends on the state. So we have a local VA across Australia. We do a physical inspection of the property. In terms of the negotiation, the amount of transaction we do, we try to find most of the properties through the off-market. 97% of our properties are off-market sourced. According to that, basically we'll do all the comparables. When the properties are through the distress sale or sometimes deceased estate, someone is divorcing, these properties are much below market price. So every time we try to say around 4 to 5% on the property price, plus the amount of time which you're gonna spend in that particular market would be a bonus, because we source the property much before the time you're gonna spend. In terms of the due diligence, yes, we check fire zones, flood zones. We check is there an easement on the property, any covenant, any caveats on the property, whether the property is very close to the high tensile wires, whether the property is very close to the train lines, major highways. We do all of this due diligence, and then we put that report in front of the client and let the client decide whether they like the property or not. So in our entire process, we give you the reports which shows why we are buying there, what are the future prospects of that area, what are the comparable values with the neighboring properties, and then how much we are buying for, how much we are saving, how your cash flow will look like. With that, we'll give you the supporting artifact document of the due diligence report, plus the video inspection. So basically, these are the steps which we follow to satisfy every client.
All right. One last question we will take, and then we are already at 8:03, and we don't want to really spend too much of time. One last question which we want to take. In your super, can I buy properties which I can flip and enjoy the capital gains benefit? Julius? So if you're looking to buy properties to flip, okay, again, it's purely about strategy. So when you're looking properties to flip, you have to understand when you want to flip, you will want to enhance the value of a property. When you're looking to enhance the value of a property, you're going to do some kind of a construction. You're going to do some kind of a thing in it, some kind of an improvement in it. And as we were discussing at the earlier stage, it's not so easy to do construction. It's not so easy to, the rules don't allow you to do that, to do major upgrades and do all that stuff. So you have to be very, very clear about how you're going to get the funds and whether that fits in. And you need to sit with your accountant and try and see whether they are allowable expenses, whether you can really get into that or not. Unless you can do that, it's not. This is not the structure. There may be trust structures which work there, company structures which work there. That's not the topic for today. You can obviously listen to us when we are talking about those sessions. I think we are doing one on this thing in about 2 or 3 weeks, if I'm not wrong, 3 weeks from now, if I'm not wrong. But yeah, if you are interested in doing that, that's the webinar to attend. But SMSF, if you're looking at doing major changes in construction and that kind of a stuff, not the right tool for you to get into. There are much better and much easier structures to work through. But again, that's a discussion for another day, and that's a discussion for another point. 8:05, guys, and I think we are 5 minutes above time. Thank you so much for joining us. Thank you very much for listening to us. Thank you very much for giving us the opportunity to be able to give you some bits about what SMSF investment is all about. Hope we have been able to clear out your doubts. Hope we've been able to explain to you why it should work for you, why it may not work for you, and what you should look out for, and what are the important ones. If you want to have a detailed discussion, our names were always there. You can always reach out to us. We are available online. We are available through our calendars. We are available on our websites. We are available on phones, WhatsApps. You can message us. You can book an appointment. You can reach out directly. No obligations. We are happy to answer all and every question which you will want to ask us. You can ask us in any other ways. But thank you very much for coming and joining us. Thank you.
Thank you so much.
Bye, guys.
Bye.